Hey guys, welcome back to the Capital Mindset Show. Today we're going to be revisiting a company, AMD. This was voted on, #1 vote on the Discord community. By the way, link in the description down below if it's free to join. You just have to answer the 3 vetting questions, by the way, so just make sure you do that. I see that some people try to enter and they don't follow the instructions precisely, and so in that case, the filtration process will not let you in. Okay, so yes. We're going to talk about advanced micro devices. We've talked about Intel in the past. We've talked about Micron. We actually have talked about advanced micro devices. It was one of the first videos ever discussed or made on the Capital Mindset Show. And, you know, I won't go through that one with you guys, but basically I thought at the time, or the conclusion at the time, was it was overvalued. It went through this massive run-up period, only to then fall back and then, you know, now we are where we are today. We're just under $100. I'll start, as always, with the actual price action to kind of give you guys a little bit of a taste as to what the heck's going on. So it's down 2% today as of recording this video. And you can see the 1 year. The original recording video was around here, had this massive run up. And again, oh, look at that, November. Remember what we started talking about in November, and then even dedicated videos in January. Yes, you are aware. Which, by the way, a very large YouTube channel who often receives quite a bit of criticism has just discovered the liquidity crisis, as he calls it, yet last night. Okay, so I wonder where he heard that from. Or I think everyone now is kind of identifying it, but, you know, this channel, we're talking about it for quite some time. We had conversation on it on our live streams. So we had good times. So now I think everyone's understanding it. So, or at least identifies that it's here. But, you know, what can we do? Okay, so we are now down from all-time highs at about, let's see, 46.85%. Okay, so we're going to go over the presentation, kind of the sales pitch of the company. I don't think this company needs any introductions. You guys are familiar with their CPUs, their GPUs. You also have to consider that they have a lot of B2B business as well. They are a fabless, so they just design the actual chips. They don't produce the chips, okay? And the main source of their production is Taiwan Semiconductor, which presents a variety of risks that might present themselves in the future, such as, you know, some sort of large-scale invasion of Taiwan. Any destabilization within that region can destabilize that supply chain. And that's a little bit of a risk, something that their competitors don't necessarily have. Okay, so if we go over to their presentation here, and let me actually zoom out for you guys just a bit, because that way we can see the full thing. All right, so they just acquired Xilinx, and so we're going to see a lot of the synergies play out. They're going to try to tell us or try to break down why it's so beneficial. Again, this is the sales pitch. If you do not like anything presented here, you're probably not going to like anything in their numbers anyways. So this is the nice stuff. Okay, so our leadership in technology. Okay, so they have industry-leading IP, data center leadership, software enablement. We'll actually discuss a little bit about their market share and stuff like that. Okay, so our best product portfolio. Okay, so they have data center. This is what I was talking about, a lot of B2B. Client, B2B. Gaming, that's probably what you and I probably contend with. So that's B2C. And then embedded, that's B2B as well. Okay, so they're gaining share in embedded, they're gaining share in data center, and they're gaining share in client, and I guess they're gaining share in gaming. They're gaining share across the board. So remember that you don't always have to be the best. You don't have to have the best performance. You have to have the best cost to performance. Price to performance is a very important metric. Okay, so AMD has been known to kind of dominate that specific measure, price to performance. Okay, so let's go over here. We have quarterly revenue growth really strong, and we'll talk about estimates. Remember that they just did the merger, so you know we have to try to pencil out organic growth. All right, so gross margins 48%. So gross margins are on the rise while we looked at Intel's were on the decline. Intel's were from a higher base though. So gross margin of 48%, pretty strong there. Operating income, okay, so 16% of revenue, so pretty strong margins in terms of operating income or operating margins. That's what we'll call it there. Okay, we don't care about non-GAAP there. Okay, so let's go here. Computing graphics card segment. This if you guys are in the gaming field, you guys know that this area has been getting squeezed. A lot of crazy prices, not enough to go around. So you can't even. There was a time when you couldn't even find the 6900 XT, which is their top-end graphics card. So ASPs, average selling price. Okay, so grew Ryzen processor sales. Okay, so that's good. People are kind of getting the more higher-end products. Let's see here. Okay, so they're still using that. Anything interesting there? Not really. Okay, so enterprise. This is a big portion. Okay, so and again, just to remember, this is 2.8 billion. So computing and graphics card is 2.8, and then enterprise and embedded solutions is 2.5 billion. So another big business. So this one was up 88%, and 13% driven record by processor embedded revenue. This is where they're gaining a lot of their market share, by the way, just so everyone understands. So pretty good here. Xilinx, here's what I was looking for. Okay, so they did it. They completed it in February 14, 2022. And yeah, so for those of you who don't know, we'll talk a little bit about Xilinx after this, especially like what it is that Xilinx does and kind of break it down in a simple way, but we'll talk about it. Just understand that it's been accretive to the company, and yeah. All right, so I think this we don't need to see, but nice to see the trend, this quarter-over-quarter gross margin trend. This is really interesting, really good to highlight. So they're going in the opposite direction of Intel in this sense, and I'm trying to skim through these to see if there's anything else we want to really talk about. Otherwise, we'll just go to the Xilinx talk and the model. Okay, so if you recall the video that I made on Intel, I explained a little bit about programmable chips. So Xilinx is actually the pioneer in this field. So programmable chips allows for more sophisticated design for a particular chip to do a task. Okay, so in these programmable chips, they're more adaptable than ASIC chips. So ASIC chips, they're very specific. Once it's done, once the groundwork is laid, they can't really be changed. So Xilinx is the pioneer in just under that in terms of hyper specification. So these programmable chips, they can be, how do you say? They can change their task, and in terms of efficiency and output, they can be better at particular things than a graphics card and a CPU. So that's the layman's way of explaining it. And so AMD purchasing Xilinx has a lot of implications as to how AMD can then provide solutions to enterprise customers, and that's what you have to think about. That this solution, this purchase acquisition, is going to be geared towards those enterprise-related clients. So Xilinx, enterprise growth in that, and that's where AMD is showing their focus. Dr. Lisa Su, she's done a wonderful job at guiding the company out of where they were in the rut. And by the way, if you guys don't know this, Global Foundries is actually from AMD. That's when they made their decision to go fabless. And funnily enough, Xilinx also kind of pioneered that as well. So they also were the first to create the fabless manufacturing business model. So it's kind of poetic that they are now one company. Not poetic, but it's interesting. It's interesting. So, but remember the risk. The risk with that is they have a lot of reliance on a third party. Okay, so there's a benefit and then there's a risk. The benefit is they get to just focus only on design. The risk is they are relying on someone else. Now, Intel is not fabless, so they actually have their own fabrication business inside the company. And so through that, Intel has, you could argue, less of a risk in that particular category. But, the question is, can they execute? And it is a very capital-intensive business. You guys probably already remember from that video or any other videos you've seen on Intel, they are spending a ton of money on the facilities here in the United States, as well as Taiwan Semiconductor is doing the same thing, by the way. So keep that in mind. But that's some little tidbits to remember. All right, so we're going to move over to some quick discussions about market share and trends. So AMD market share rose actually 87 basis points month over month to about 15%. So this actually was below the 20% peak in 2017, but still, it's still moving in the right direction. Okay, so I want to also state that the shipments, we are seeing a decline in shipment volumes, for example, from notebooks in April. So with that, we have to say April notebook shipments actually were down 41% month over month. This is the supply chain concerns that you probably are hearing. If you hear these words, I'm just trying to be a little bit more specific, trying to sign a greater concentration on this topic. So 35%, and Citi was expecting, so Citibank was expecting a greater amount, and apparently it came out way lower than expectation. So this, again, has everything to do with China, the lockdowns and all that. So why is this important to AMD? Well, what's inside of those notebooks? Think the embedded chips. Remember that thing from the presentation we were just discussing? Yeah, those things. Those are inside those tablets, and if they're not moving, that's a problem for AMD's customers, and then by extension, a problem for AMD. So that's a lot why. And we also cannot forget this. We also discussed, I think in the Intel video or in the live stream, but I'm bringing it up again here. We discussed why when initially all the chip companies were actually starting to fall, that there was some concerns by analysts regarding the actual order flow from customers, so that it was actually declining. And that's a little bit of a concern because, what does that spell for the future? This wasn't a surprise to any of us because we were already talking about the potential for a global slowdown. And so it wasn't, like I always say, we don't make like necessarily a prediction that this will occur. We understand what environment we're in, and then we're not surprised that occurs, okay? We didn't have any exposure here in Capital Mindset to the chip industry except for a single company, Cirrus Logic. But as far as AMD or Intel, I don't have any positions in them, and we were seeing some concerns from analysts regarding that declining order flow from customers, and that is indicative of a slowdown. So, and I think on the topic of that conversation, I also went further and said, well, I do expect us to go through some sort of slowdown, and these numbers are showing that. Also remember that Intel, and I think AMD also is talking about this too, they are expecting supply chains not to fix themselves until 2024. Originally, and I think this was in the very original video on Capital Mindset regarding AMD, we did talk about how I believed the supply chain would fix in 2023. And this was coming from the companies stating that. Now it seems that 2024 seems like it's going to be the year. And then that has a negative impact on the value of these businesses. So all these things were kind of being talked about all at the same time. All were negative drawdowns or negative drawbacks for these companies, or headwinds, you could say, for these companies. So that being said, these things could fix themselves a little bit, but these are some concerns we should have. All right, so we're going to move over to the valuation model, and we're going to figure out or pencil out some growth rates that I have already implied, but I'm going to put us here. So this is from the live stream. And by the way, if you guys, didn't see the live stream, we went over a bunch of companies that the audience asked about, and so I just took the time and we went over some. One of them was Snapchat, but here we're going to do AMD. So we're waking it up. Actually, yep, there we go. So it's already there. So analysts, and I'll actually move out this way, out of the way. Well, actually, I'll just do this. Bring it up here. So analysts actually have a buy rating. You can see right there, price target of $118.67, applying a 36.64% upside. So right there, that's all you really need to know. You see the sentiment score is just under 1, so it's basically neutral or positive. So we take a look at the capitalization. They look pretty strong. They're not going to go bankrupt anytime soon. Revenue, pretty strong trend there. So they are above trend line, but I think they're going to develop their new trend line. So the restructuring that occurred for AMD is actually a case study used in a lot of business schools. So the restructuring of AMD and versus Intel is one that, at least when I went to university, was one that was used. And that's actually right there in the 2011, 2012, all that time period where Lisa Su was really fixing the company. And I remember back in my birthday when around 2016 when I had purchased AMD. So I was a lot less experienced per se, and that was one of the ideas that I pitched when I was actually getting my employment. So it was AMD, actually. Fun fact, by the way, if you guys were ever wondering. I talk a little bit about my past loves here and there, but AMD was a past love. And AMD was actually, if I actually do say so myself, was quite popular. If you were a gamer of any sort and you like to build computers, you understood AMD, you understood NVIDIA, but you at least, well, not the whole business, but you at least understood the B2C aspect of the business. And there was a friendly competition, not friendly competition. It's more of like a rivalry. I'm trying to explain this for non-PC builders. Like Team Blue and Team Red. Back in those days, AMD would always get slaughtered, but they would always be the best cost to performance. By the way, as of this moment, I don't actually have AMD in my rig. I only have NVIDIA and Intel. I have an Intel i9 12th generation and AMD 3080 Ti. So I don't actually have any AMD. However, the 6900 XT is very compelling if you can find one. So we'll see in the next generation. The next generation, maybe things will get better. Cash flows, pretty strong there. Estimates are that they actually increase further. I would say this. Unfortunately for AMD, and I said this in the Intel video, during the shortage, it was unfortunate that it happened while AMD was also achieving dominance over Intel in a cost to performance measure, because and severe one, because Intel didn't have a problem selling almost all their inventory because there was such a demand glut and not enough, or not a glut, a demand excess, you could say, exuberance in both chips, graphics cards, everything, that it didn't matter that Intel was lacking in terms of its offerings versus a price to performance measure. It didn't matter. All of it would sell out because all of the AMDs would sell out. So if we were in a different time period where AMD was able to capitalize on the demand for their products better, things would have been different, a little bit different for AMD. AMD would have probably gained more market share than what actually happened. So I actually highlight that in almost every Intel video that I've been doing, because when you're from an Intel perspective, you also have to consider that it's a good thing for you, because this happened. Intel is getting, smacked down in a time period where there isn't that surplus of supply. If there was more chips to go around with, that's a very bad thing for Intel, because then AMD can actually satisfy all the customers. In this instance, you have AMD selling out, and then you have Intel is like, all right, we still have product, and then Intel would even sell out. So they had no problem selling their products. No one had any problem selling their products. Now, as far as inflation goes, inflation is raising the costs. And by the way, I want to cover this real quick. I almost forgot. Yeah, you can see the shares going up. Okay, so they're diluting you a little bit. So we are going to take that into consideration. All right, but back to the thing. So Intel and AMD, they're going to have a little bit of struggle with inflation because they're going to have to actually try to pass on those costs to the consumer. And that's reflected in the producer price index. Or part of that is reflected in the producer price index, because that's the increase in cost for producers to produce those same goods. There's the CPI, which is what the consumer faces. And I'm giving you the layman's explanation of both, by the way. So the producer price index gives you a taste of how the producers are feeling. What are the costs going up? So one might be a preceding indicator to the other one. So the producer price index might rise first, and then the consumer price index might rise later. And then that will be only there'll be a effect on one to the other, but not always one-to-one, because not always can the producers pass on the exact same level of increase in price to the consumer. So a little tidbit there. Okay, so moving on. As far as growth rates go for AMD, I actually do think it is possible for AMD to achieve a 20% return. Actually, this was the middle one. 20% return. I do think that is possible. Not return, sorry, growth, okay? And you can see that if they can achieve that, the price is actually, if you want a decent margin of safety, about a $46 buy price, okay? Significantly lower than where it is today. And I know it looks crazy, but that's where it is. 20% is doable. If you start to believe that they can achieve closer to 35, you're already in the buy range. You're actually already in the buy range. But hold off on that, because I am assuming some share repurchases. Let's remove that. I'm going to assume some share dilution, not to the same extent, okay? And let me just be very clear. Like I have stated this in the past. When you look at share dilution, share issuance, or share repurchasing, you want to make a judgment call as an investor. Okay, so are you willing to buy it here and now? If you are, then you probably want the management team to also be buying back shares. If you're not willing to buy the shares now, you don't really want the company to buy back shares. Okay, it's actually would be destructive to you if you're right. Okay, so we have to assume that you're right. So let's make a scenario, a perfect scenario where you're willing to buy AMD at the present price because you think it's of good value, and you're right. Okay, so if you are right, then you as an individual should agree with the share repurchasing. If you're wrong, or let's say you don't think that, and let's say but you've been holding AMD for quite some time, but you wouldn't buy it right now, you would actually be in favor, or logically in favor, of some share dilution because you think that the market is giving you a premium. And again, management wants to lower that weighted average cost of capital, or that realized weighted average cost of capital. I'm going to not use the book term now. You want to lower that as much as possible. So perhaps issuing shares is going to be the best way to do that, because maybe the shares are of a premium value and taking on debt would be a little bit more expensive. And then that hinders the company's ability to take on certain projects like we've discussed before. So if I'm at work and we're looking at taking on project X, and I look at our company's, cost of said capital to take on project X, well, the project X might has to be above the hurdle rate. So it has to be at least above the cost of the capital that we are going to deploy into that project. Otherwise, no. So management tries to lower that cost as much as possible so that we can take on more projects, and so that our projects can be more and more accretive to the business as a whole. So if we have, let's say, a project cost or cost of capital of 0, that's not really possible. Let's pretend, though, that it's 0%. Then basically any project that has any little positive return, we would take on. We would absolutely take on. Okay, even banks don't have a 0 cost of capital, but in practice we'll discuss that in the bank video. But it's an interesting way to think about banks when we get there. All right, so AMD. I think they could grow at 35%. It is possible, but I'm putting that on the lower probability measure. Okay, and then when I kind of penciled out, I think it was, what was it? I have it here. Yeah, so in the other one, it was actually 24.7%. And okay, just rounded it up. Whatever, round it up to 25%. It's fine. So 25%. And so if we think it's going to grow at 25%, the buy price is $62.33. And then this is probably, that's the next metric. I'm rounding, by the way, at this point. And I think on the low end, they can grow at like 10. Okay, so yes, extreme. Okay, I know extreme. So this is the following. And this is kind of like the set of scenarios number 1. And I'm going to actually become a little bit more aggressive in just a second. So I'm just going to discuss this real quick. So 10%, I think that's easily achievable by AMD over the next coming years, at least for the next 10 years. I think 35% is achievable, but less probable, okay? But it is achievable. And the thing is because I'm kind of also assuming they get a little bit of hurt from a little bit small slowdown in the next coming years because of a little bit lack of spending, but there's so many tailwinds in this industry. However, there is also a lot of competition coming internally from some companies like Google, Amazon, Facebook. And also, by the way, Facebook and AMD, I think they just announced a partnership to increase or expand the access to the internet. Again, why is that in Facebook's favor? Well, more people with internet equals more people that can use Facebook. And also Google has that exact same benefit if more people have access to the internet. But okay, so going back to AMD, I think these growth ranges are fairly reasonable. And I think the probability that they occur within this range is highly probable. Okay, highly, highly probable. Now, it does assume, the model is telling me at these assumptions, it's not worth making an investment, and I have not assumed any level of share dilution. If I do so, it does bring down a lot of these estimates. So I would say if my high degree of confidence was between 35 and 25% growth, then in that instance, I would say that maybe at this point is the beginning of the nibble phase. And so how I have Adobe in the portfolio, it's not that I think Adobe is a great value. It's that I do want to have Adobe eventually become a position in the portfolio. And I am, by the way, deploying more capital. So I'm actually reducing my cash position and actually deploying capital as the market has now presented better buying opportunities. So I can build up some other positions. Okay, and I think I discussed in the live stream what those positions are. And I think I also told everyone what it is exactly I was buying. buying. But AMD, if I was like, hell bent on having it in the portfolio, I might make the argument that right now is the beginning to like just, tiny little position and then just build it out. And then having full well knowledge that it might actually continue to decline or maybe not go anywhere for a little bit, but that allows me to just build out the position. And that's if I really do believe in it, okay? So now I told you guys, I'm gonna go now present a more aggressive set of scenarios that I've actually penciled out. So this is, we recover a little bit better. The economy doesn't slow down nearly as much. A lot of investment goes into semis that we previously did not expect. And I forgot to mention, I also kind of threw in some scenarios where kind of China whacks out some supply chain stuff with Taiwan. So on the record, that's what these scenarios are. At least the scenarios like 1 and through 3 include some sort of like Taiwan shift or whatever. So, and I do assume, of course, because I don't assume it's negative, I assume that, they get past it and they obviously fix it. All right, so I'm going to assume everything is dandy in the next 10 years. And so in that instance, we would remove that 10%. I think that the base case would probably be about a 15, 20, I'd actually do, that's like the lower end. I would actually bet more on 22. Oh, I have it written down here. Yeah, I got between like 22 and 23. So I'll just put 23. I'll just be a little more aggressive. And then, that was still 24.7. This one was now the 30%. And this one was the 37. All right, so these are the scenarios that I present if I think could happen. If, things are fine and dandy, we do see some improvement in the sense of, the economy doesn't necessarily have a massive drawdown. Companies don't necessarily pull back a ton on this investment. And we do get a decent margin of safety. So those would be the prices that I'd be really interested in. We're not too far from scenario number 4. We are already in scenario number 5, technically in the range. Now, they were growing, by the way, at those rates in the past, but I actually do want to state I don't know how sustainable that is going forward in the future. Now, I want to also highlight some key metrics for AMD. That return on invested capital is very strong. We're going to take a look at the ratios, see if that's a fluke. You can see on a price to earnings and a price to free cash flow, it is expensive presently. So that's why I think, for example, that, and by the way, you can say, I'm actually not assigning I'm assigning an equal weight percentage because I don't necessarily know how probable these ones are. But the PE and price free cash flow, it is expensive on a, I guess, how do you say, textbook analysis. But we want to also note that they are growing tremendously fast, and they are expected to have, I think it's like $4.44 in earnings about next year, which would imply somewhere around like a 20-something PE. So basically being cut in half. And so that's a lot of growth for now. And then so how much does that growth persist? Remember that we are basically compounding these growth rates. So it is a lot of growth when you think about it. 20% growth every year, 23% growth every year is a lot, okay? 37% growth is a lot. For 10 whole years, it's a lot. So that's why I'm saying that scenario is, So if you're wondering. And then let me assign, if I assign the equal, sorry, not the assign the equal, I assign the actual ones, it says I should have -3. So basically not interested right now. But again, like I said, if I was adamant about this company being in my portfolio, I would probably be considering myself saying, little nibble, then add if it were to show some further weakness. You remember that the last time I did speak on AMD specifically, the very first video at least, let's actually go to that price. Do I remind everyone, just in case anyone skipped over that part of this video? It was around here. Look what happened. Sentiment was really strong, and we were still in the midst of that liquidity boom, you could say. And, we were up 54.27%, all before, it finally came down, and now we're down 14.25% since around where I talked about it. I forget exactly when, but yeah. So the summary on AMD, great company, great products, not my cup of tea in terms of an investment at the present moment. I can see why others would want it though, because my growth rates might be a little too conservative for some people who are, taking a look and they're saying, that's too conservative. That's fair. But according to me, All right, finishing off with ratios, and then we're going to close off. But very healthy liquidity ratios. Solvency ratio, same thing, very, very healthy. Gross profit margin, again, really strong. We were already talking about that. Operating margins, net profit margins, strong. ROIC, excellent. I do see it's kind of like a fluke a little bit, though. ROA, ROE. I'd focus more actually on the ROA for this company than ROE. But ROE is still a good one for this company. I do see ROIC seems to be a little bit of a fluke, though. Earnings quality's been pretty good most of the time. Yeah, I'd say it's showing it's a good company. It's showing it's a good company. It has like this little fluctuation that has to do with probably necessarily the investments and how they recognize the income coming in. All right, so I think it's a pretty good company. Not my cup of tea for an investment right now, but I can see why someone would make the argument. So yeah, if you guys like this video, go ahead and feel free to leave a like. If you guys want to leave a comment and continue the conversation, go ahead and do so. I'll see you guys on the next video though. Otherwise, bye.